Hello traders and welcome to another video review. Today is Monday, April 20th, 2026. Let's take a look at the economic calendar for today. So what do we have here on the economic calendar? Trade balance in New Zealand up from minus 365 million to 695 million. People Bank of China low on prime rate in line with the expectations 3%, and the German PPI in line with the bit better than expected 1.4% with the actual number of 2.5%. So PPI is rising, is increasing, is going up from minus 0.5% to 2.5%. Very nice and strong piece. We are still waiting for the data from the Canada. Core CPI and CPI data are scheduled for release at 2:30, and at 5:30 we got Bank of Canada Business Outlook Survey. At 40 minutes past 6 o'clock, we got the ECB President Christine Lagarde to give a speech. So that's about the, the situation on the economic calendar. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro-dollar bearish engulfing pattern at the level of 1.1850 had been materialized. As we said, this is the bearish divergence here, and you can see it clearly that this divergence worked very well. Bearish engulfing extension to the downside. Now we just bounced from the technical support at 1.1743, local low 1.1730. So the extreme low was made 17 pips below the technical support. Nevertheless, there is a kind of a bounce here as we got the kind of a pin bar as well. Bounce a little bit higher. Any breakout above the 1.1768 might be bullish intraday. Nevertheless, with this kind of a momentum, 46 points only, the outlook remains slightly bearish right now. This is the pullback time. The other levels are, as you can see on the chart, not a problem to identify them. The same situation is being played out by the people on the markets, individuals on the cable. Bearish engulfing pattern, negative divergence, movement towards the technical support, very important technical support 1.3882. And now this technical support is being tested extensively. RSI 44 points means that the chances for moving lower towards, for example, 1.3380 are quite high. So we should see lower levels quite soon if this bearish pressure will persist. On the US dollar versus the Japanese yen, not much is going on. The market still trades inside of this range. Local low was made here at 157.61. Then we bounced higher, gapped up a little bit. Nevertheless, we are still back inside of this range. So momentum at the level of 50. Not much is going on. Possibly some sort of the distribution pattern is taking place. However, we don't know that for sure because neither bulls nor bears are in charge of the market. In the background, obviously, there is some sort of the strength, right from the middle of the February to the middle of the to the end of the March. Basically, we got this strength to the market. Nevertheless, it keeps looking like the partial distribution pattern, so we should expect maybe a little bit more to the downside. Nevertheless, if there is still this scheme of buying the dips, maybe this is not the partial distribution, this is some kind of a consolidation only, and the market might be getting ready to move even higher. The gold market keeps trying to move up and it's doing it slowly but surely. Look at this. Local high, higher high, higher high, marginal, but still higher high, higher high, higher high. This and the last higher high was at least at 4,000 something. Let me just take a look, 4,889. So basically the bulls on the gold are still trying to move higher because ABC to the downside had been completed. This doesn't look much impulsive. This still might be some sort of the connector. This still might be some sort of the corrective pattern, and maybe this whole structure will evolve into more complex pattern. Nevertheless, the bulls are still trying to move higher, but all in all, at the end of the day, they fall back down into the range. SP500 coming off the all-time highs, 7,147. and this time we went as high as 90 points on the 4-hour time frame chart of the RSI classical setting. We are back down towards the level of 67, but the confirmation of the top, first confirmation of the top might be seen only if this situation here with 4011 is cleared. So this is the technical support. So the outlook on the S&P 500 still looks very bullish, and we should see more upside to follow. As you can see, this is very impulsive movement to the upside, like trade like no tomorrows. This is how the bulls are trading on the S&P 500. Crude oil keeps digging lower after the breakout below the after the failure to move higher than 119.42, reversal, breakout above the trend line, a test of the technical resistance. This is the key level these days, 95.36. That's one of them, and the second one is 91.89. We dipped as low as 80.55 last week into the extremely oversold conditions. Now we have some smaller gap up on the early Monday London session. Nevertheless, it looks like this is still the market which is under the big pressure, and as far as we stay below all of this technical resistance level, the outlook remains bearish to maybe slightly some sort of the steady range trading. Bitcoin reversed significantly after hitting 78,333. So now this will be, of course, the technical resistance, but we didn't hit the target projected. Next technical resistance, not projected target, but the next hard technical resistance, 80,600. We got the reversal lower, and we went very much down. What I mean is that we went the biggest correction here, 5.88. So this is possibly that movement to the upside had been completed. That's the end of this cycle, and this is the biggest correction, which means we got the over balance of price and time, and these days we should see possibly some extension to the downside, and then there is still possibility of movement to the upside. However, if you look at this, we know that we made the biggest correction, so we don't need this data on our screen. We keep our charts clean. This technical support, 73,829, is now the key technical support we got on the chart, okay? Because it's been tested so many times. Look at this, and it's being right now unpenetratable, right? Unpenetratable. And as long as we stay above this zone here, the outlook still remains bullish. Now the momentum hits the level of 40, now trying to bounce back up, but please notice we are going lower from the extremely overbought conditions. So that's perfectly fine. The market did this kind of a 5.88 pullback, right? So as long as we stay above this zone here, the outlook still remains bullish, because maybe this pullback here had been completed. Minus 5.88 is the biggest one. So the next target is still definitely $80,600. Nevertheless, we don't know if this is only the first leg of the correction, then second and the third, or maybe this is the whole correction which is completed. It looks like impulsive to me, like the wave 1, 2, 3, 4, and 5. So maybe we should see more weakness into lower levels, and then resumption of the uptrend. But we need to see for more data. And for now, that's everything from me. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.